All students are welcome to today's accountancy class. So because of examination, I thought to make some revision related to partnership accounts. Partnership accounts consist of basic concept of partnership business, admission of a partner, retirement of a partner, death of a partner, and dissolution. And in between that, in case of admission, retirement, and death, you have to make a calculation of goodwill in three methods: average method, super profit method, capitalization method. See, in basic concept, the word partnership means two or more persons starting a business with the aim of sharing profit or loss for the business. In order to start a business, they want to contribute money in the form of capital. So basic concept of partnership consists of preparation of capital account, preparation of capital account in fixed method, fluctuated method, profit and loss appropriation account, guarantee of profit. What do you mean by capital account fixed method? In fixed method, we want to draw one capital account and current account to show the adjustments. In capital account, we have to show only the opening balance, and the remaining adjustments related to capital account we have to show only in current account. For example, current account, credit side, balance brought down, salary, commission, like that items. Debit side, drawings, interest on drawings, like that items. We will find out the new balance. In capital account, we have to take only the opening balance of the capital which they start. Appropriation account. Appropriation account is the extension of profit and loss account which shows appropriation of profit. It is prepared to find out appropriation profit. It will distribute to all partners in their old profit sharing ratio. Next, partnership admission. What do you mean by admission of a partner? So this class is very much useful for the students, those who are writing examination for the CBSE purpose. Then it will be very advantageous for you. Just listening, you will be able to write the examination in a good way. Try to increase your mark. Okay, students. See, in case of partnership admission, what is the meaning of admission? A new partner is taken into business. That is the case of admission of a partner. When a new partner comes into an existing firm, he has to bring money for two things. One is for capital account and other is for goodwill. A new partner must bring his capital account balance and his share of goodwill in the form of premium. The name of the share of goodwill bringing by a new partner in his business is called a premium. What is goodwill? Goodwill is an intangible asset of the business. It has value in monetary term. It has many more factors: location, market condition, efficiency of business. Okay. So, goodwill can be calculated in three ways: average profit method, super profit method, and capitalization method. See, next is about the calculation of sacrifice ratio. Dear students, you want to take care of finding sacrifice ratio. Sacrifice ratio is equal to old ratio or old share minus new share. See, in case of admission, to distribute goodwill, we will find sacrifice ratio. We will find sacrifice ratio only for sharing goodwill brought by new partner. Okay, only for that purpose, only for sharing goodwill in case of admission of a partner, we will find a sacrificing ratio. See, next is about the gaining ratio. Gaining ratio is equal to new ratio minus old ratio. New ratio minus old ratio. Sacrifice ratio is equal to old ratio minus new ratio. Gaining ratio is equal to just opposite of sacrifice ratio, new ratio minus old ratio. Okay, students. Next, admission of a partner. First journal entry. When a new partner brings share of capital, journal entry cash account debtor to new partner's capital account. Next, when a new partner brings his share of goodwill in the form of premium, the name of the share of goodwill bringing by new partner is called premium. One word question. See, when a new partner brings his share of goodwill in the form of cash, journal entry cash account debtor to capital account. Cash account debtor to goodwill. When a new partner brings his share of capital, journal entry will be cash account debtor to capital. When a new partner brings his share of goodwill in premium, journal entry cash account debtor to goodwill. Okay, students, these are the things you have to remind. Next, revaluation of assets and reassessment of liabilities. What do you mean by revaluation of assets and reassessment of liabilities? When a new partner who comes into the existing firm's existing assets and liabilities will be revalued. Its value will be revalued according to the recent trends in the market. So, we will prepare evaluation account, capital account, cash account and balance sheet. What do you mean by revaluation account? It is prepared on the basis of nominal account. Okay, revaluation account is the basis of nominal account. Examination question: how to prepare revaluation account? Mention the basis of revaluation account. Your answer should be nominal account. So in revaluation account, why it is preparing? Revaluation account is to be prepared for finding out revaluation profit or loss. Okay, how to find out revaluation profit or loss? All the assets value, decreased value of assets and increased value of liabilities, that one we should be debited in revaluation account, and similarly increased value of assets and decreased value of liabilities should be credited in revaluation account. This is the case of preparing revaluation account. So now I can say journal entries related to revaluation account. When asset value decreases, journal entry revaluation account to asset account. When the value of liability increases, journal entry revaluation to liability. When the value of assets increases, journal entry asset account up to revaluation. When the value of liability decreases, journal entry liability account up to revaluation. Next important thing to remember, revaluation account profit or loss. If credit side of revaluation account is more than debit side, we will get a balance in debit side of revaluation account. That balance is called revaluation profit. It must be distributed among old partners in their old profit sharing ratio. Revaluation account profit or loss will be distributed to old partners in their old profit sharing ratio. Afterwards, we have to prepare capital account. Then capital account we have to enter opening balance, share of goodwill, then new partners capital, past profit, present profit, everything on the credit side. Then debit side, drawings, interest on drawings, loss, present loss, past loss, etc. We will find out the new balance of the capital account. Afterwards, capital account balance will transfer to balance sheet. So before preparing balance sheet, we should prepare cash or bank account. This is preparing for finding out a correct correct cash balance of the business during the year. Okay, see cash balance, how to find out present cash or bank balances given in the balance sheet, and new partner's capital, new partner's share of goodwill if he brought. These three figures we have to add, we will get a cash account balance. Afterwards, balance sheet. In balance sheet, first you have to prepare balance sheet according to the old balance sheet, that is balance sheet given in the question. So if first item is cash, you have to take a cash, then take a new cash balance. Then asset value decreases means you have to deduct from the original value. Asset value increases means you have to add up from along with the original value. Similar case is is related to liabilities also. Okay, students. Then admission over. Admission, theory of admission is over. Then retirement. In case of retirement, there will be three partners. Retirement means one partner who is going out of the service due to any of the reasons. Sometimes it may be due to bad condition of health or any other reason, dispute maybe. So retirement means a partner who is going out of the business. That is called a retirement. In case of retirement, we should find out gaining ratio. So one word question, gaining ratio will be calculated during dash. Gaining ratio will be calculated during retirement of a partner. Then which or this question can come another way, which of the following ratios will be calculated during retirement. So if the option there will be four options. If there is an option of gaining ratio, you have to write a gaining ratio. So in other words, this question will come in this way, that is which of the following ratio, which of the following ratios will be calculated during retirement? Sacrifice ratio will be there, gaining ratio will be there, new ratio will be there, none of this will be there. You have to write a gaining ratio. So how to calculate the gaining ratio? Gaining ratio is equal to dash, new ratio minus old ratio, or new share minus old share. In case of retirement, same way we have to calculate the goodwill of the firm in three methods that you have to find out. How to find out goodwill under average method? Add all the year's profits. If there is any loss is there, that one you have to subtract it, divide it by number of years, multiply it with the given purchase price. Okay, friends. See, what is the journal entry for distributing goodwill in case of retirement? Retiring partners capital to only retiring partners capital account must be adjusted in case of retirement. Remaining partners capital to retiring partners capital account. We have to calculate a retiring partners share of goodwill first, then that one we have to adjust in the capital account both sides, journal entry remaining partners capital account to retiring partners capital account. Okay, then revaluation account you have to prepare to find out revaluation profit or loss. What is the need of preparing revaluation account? To find out revaluation profit or loss. In examination you can write like that. In case of retirement, revaluation profit or loss must be distributed to all the partners. It means including retiring partner in old ratio. Okay, then prepare capital. After preparing revaluation account, then you have to prepare capital account, afterwards cash account, then balance sheet. Balance sheet you have to prepare as per the same manner of admission. Next, death of a partner. In case of death of a partner, you will be asking to prepare deceased partner's capital account. So here you have to point out, you have to take care of that, which date retiring partner is, deceased partner is dying. Okay, so if he dies at the end of the month, for example 30th October 2022, so you have to include that month also, April to that month, count and take. Or if a person is dying 1st October 2022, you have to take the month that till previous month. So don't take that month. If he is dying on 1st October 2022, October month you cannot count. So till September you have to count April to September. See accounting here, how it is saying according to that. See, deceased partner's capital account over. Deceased partner's capital account must be transferred to his executor account. Executor means legal hire. Those who are authorized to receive the benefit of deceased partner. Deceased means died person. Then their account balance. Whose account balance? Deceased partner's account balance must be transferred to executor account. Executor means legal representative. അതായത് മരിച്ച വ്യക്തിയുടെ ബെനിഫിറ്റ് വാങ്ങാൻ അർഹതപ്പെട്ട അവകാശി. അതാണ് എക്സിക്യൂട്ടർ അക്കൗണ്ട്. നെക്സ്റ്റ്, admission, retirement, that's the same rule. Journal entry, capital account, journal entry, revaluation account, capital account, cash account, balance sheet. Same rule. Okay. Then journal entry also same. When asset value increases, when asset value decreases, like that, as it is given in the admission case. Then dissolution. Dissolution means separate chapter. Dissolution means a separate chapter. Dissolution means a firm partnership of business is coming to end. Stoppage of business. That is the meaning of dissolution. You can write in examination stoppage of business. The word dissolution means stoppage of business, partnership of business, firm comes to an end, like that. So in case of realization, we have to prepare journal entry, realization account, partners capital account, and cash account. In case of dissolution, we will not prepare cash or bank account because business will not have continuity. Business stopped, no. That is why we are not preparing balance sheet in case of dissolution. So first journal entry, when asset value, asset at book value debited to realization. Asset at book value means that much value of assets we have to sell. So journal entry, realization account debited to all assets except cash and bank. And profit and loss also, that we have to avoid. See, next, assets realized, assets sold. Assets realized means we sold assets, then we received cash. Journal entry, cash account debited to realization. Okay. Next, liability to be transferred. Whatever the liability we have to pay off, that one we have to transfer. Realization account debited to liability. When liability transfer, journal entry, realization to liability. When we pay cash, not like that, that is a mistake. See, when liability transfer, journal entry, liability to realization. When we pay off liability, journal entry, realization account debited to cash. Similarly, just like expense also, realization to cash. These are the journal entries you have to remember. Once again I will repeat it. When asset at book value transfer to realization account, journal entry, realization account debited to all assets except cash, bank, profit and loss balance, if any. Next, when assets at book value realized, when assets sold, journal entry, cash account debited to realization. Next, when the value of liability transferred to realization account, journal entry, liability account debited to realization. Liability means creditors, bills payable, loan, that only will be coming as a liability, creditors, bills payable, loan. Okay. Then when liability pay off, liability to be paid, journal entry, realization account debited to cash or bank. Then when there is a realization expense, realization to cash, these are the things. Afterwards we have to find out, insert journal entries in realization account, debit and credit. Then we will find out a realization profit or loss. Realization profit, how to find out if credit side is more, we will get a balance in debit side. We will have a realization profit. That one we have to distribute in new ratio to all partners. Then transfer realization profit to partners capital account. Partners capital account credit side opening balance. then goodwill, if any, goodwill you have to enter, then past profit, present profit, debit side, present loss, past loss, like that. Then we will get a capital account, new balance. That one you have to transfer to capital account. Capital account, new balance getting place, you have to write it to cash, because no balance as this business is a dissolution. So we cannot write a balance. So last, cash account. Cash account, while preparing cash account, you have to take a cash account balance which is given in the balance sheet. So you cannot take a cash balance in along with all asset in realization account. So here you have to take if cash and bank balances are there, both one you have to take in debit side, to balance brought on in cash account. Then almost all cash transactions we will have to enter in cash account. Last time now, cash account balance will tally debit and credit side. So this is the case of dissolution. Now we discussed about the partnership accounts. So some questions have been discussed. You have to study theory. Then it will be an helpful for you. Today's my likely target is 100. Okay students, if possible you can share my class to your friends. It will be an added advantage for you. Have a nice day. Now my class is coming to end. Okay students.